Shiv Puri is founder and managing director at TVF Capital. Is with us now. Shiv, great to have you with us here. Appreciate your time. Just first of all, characterize what you're seeing out there. It's kind of hard to, if you're invested, it's kind of hard to do poorly in this market. I mean, the extent of outperformance will vary depending on what you own. You've been a big bull on financials, large cap financials for a while, and it looks like finally their time in the sun is here. Your thoughts, Shiv?
Yeah, I think, thanks for having me first. But, the big fundamental change in the last couple of years has been rising interest rates globally and FII capital into emerging markets, including India, drying up and even going negative. And what we are starting to see is perhaps the first inklings of global inflation somewhat coming under check. In fact, we're seeing really good numbers on the inflationary front. And what that therefore means is that it's possible you have a peaking of interest rates. And you've seen that happen globally in terms of the movements in the 3, 5, and 10-year treasuries. Now, if you have that, you're going to start seeing flows come into risk assets. And that means we could have a year coming into 2024 where you could finally see real meaningful foreign capital come into certain emerging markets, and India being a beneficiary of that. We haven't had that for the last 5 or 6 years. So this could be a bit of a new paradigm, and I think the markets may be getting a little whiff of that. In addition to the fact that we have a national election coming next year, and perhaps the recent state elections have given people some comfort that there would be more stability and continuity on the political front. So I think it's those two big reasons where there is a whiff in the market that might be the case, which is giving it a little bit of a impetus at the moment.
Hi, Shiv. Good morning. Nigel on this side. Do you think that we're running a little ahead of ourselves at 21,000? We're thumping the table and saying it belongs to us the next 10 years, and it could very well be so. The problem is, in the near term, have we run a little too quick?
Well, as an observer of the Indian markets for over 2 decades, it actually fits the norm where, we tend to have sharp movements in the markets followed by a time correction. And this time it would probably be something similar. I don't think we've, in certain sectors, got ahead of ourselves. If we have got ahead of ourselves, it's probably in some of the mid and small cap names. But if you look at what Prashant just mentioned on the large cap financials, I think they're all still quite reasonable. I mean, the largest private sector bank in the country trades at mid-teens times forward earnings, and they're still a pretty good company. So there are opportunities like that that are very reasonably priced, despite the index being at 21,000.
Okay, got it. Shiv, just to kind of dive into financials a little bit more, what are the top ideas there? Is it, or you buy a bunch of them and kind of sit tight? Because there are different dynamics at play. I mean, all these stocks have done well at different points in time. HDFC Bank we've discussed quite a bit. Kotak maybe a little lesser so. They've got a new man at the top. 4 years now, the stock's not done very much. What's the sense? What are the top ideas here?
Well, what is happening, I think, in financials is that scale is starting to matter. And we'll see more of that. In the short term, you might have certain small banks and certain small NBFCs that can make inroads either on the deposit side or on the lending side. But they're falling behind on investing in technology. And that is going to matter in the years to come now. So, the real game here, and it's no different elsewhere in the world, is in financials, size plays a huge advantage. It's not that because you're smaller, you can grow faster. That's good in a business that generates cash flow. But financials is a lending business. And so just growing faster doesn't necessarily mean you run a better business. So I think if you look at sort of the top private sector financial firms, without going into any individual name, which I can't, but a couple of them seem to be incredibly well positioned. to not only leverage technology, fix them, the issues that they've had, but also that they're being very aggressive on gathering low-cost deposits. And that, to me, is the most important thing in banking, is to make sure that you have granular, retail, low-cost deposits that you can use to build a great lending institution. So I think they're doing the things right. I mean, we all know that the balance sheet side looks fantastic. I mean, this is the best balance sheet Indian banking has had in the last 2 decades. There's no question about that. So they have a great platform, a great wicket, so to speak. And for those that will execute, and they're only less than a handful, the runway for growth looks pretty long. We've never had a situation where our economy does well and its leading financial institutions don't do well.
No, that's a fair point. Shiv, so that's financials, and that, I mean, when you buy the top financials, you kind of get a play on pretty much everything, right? Because, I mean, if the economy does well and various parts does well, they lend everywhere, so you get pieces of everything. But to have a more concentrated bet away from financials, where else are you seeing opportunities? What else do you own? It's been a while since we've spoken, so why don't you update us?
So, you know, one of the very interesting things that I don't think we talk much about is that when an economy goes from 1 trillion to 2 trillion, there are certain areas that people spend in. When it goes from 2 to 3, there are even more dramatic changes. That extra trillion that comes from 2 to 3 is actually very interesting for most companies because it goes into spending in healthcare services, in saying buying other financial products like insurance. It goes into discretionary spend. A lot of the first 2 trillion has to go into meeting basic needs. So we're now hitting, I think, that sweet spot where a lot of this spend will go into services. We're seeing what's happening with healthcare services, and not just the performance of hospital stocks, but just the requirement for people wanting higher quality healthcare. We're seeing that in there have been regulatory issues in insurance, but as those get overcome, there are certain, and there's been mis-selling, and we all know all of that. But it is a requirement, it is a need that I think will only get bigger. So travel, leisure, consumer discretionary, these are areas that I think benefit quite distinctly as we hit 3 trillion and higher.
All right, Shiv, always a pleasure speaking with you. Wish you a good time in the markets and wish to speak to you soon as well. Bye.